Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to Monday, April 30th edition of Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick. Spencer Israel will be back with us tomorrow. Big day here on Monday, Merger Monday. 4 deals to talk about in the makes. 8:30, we'll get some March personal income. Not a big mover of a number, but we'll pay attention as well. 9:45, you have your April Chicago PMI reading. Don't forget about the Fed on Wednesday, jobs number on Friday, and can we finish April green? That will be the first month since January being in the green, and good old Barron's helps us out talking about some value stocks today. We'll get to that a little bit later in the show. Dennis, how you doing on this Monday morning?
I think we're not on because I'm going to the site and I don't see us on here. So, Joel, did you launch because I'm at PreMarket Prep and I don't see anybody else see the show. If you see it here, you hear it in the chat, then it's on my end, but I'm not seeing anything here. Yeah, no show. Angie says no show. So I think we didn't launch or start the YouTube. I don't even see a spot to click, Joel.
Okay. All right.
We're going to restart it.
Take 2. I said, good morning, guys. And John Bitar sees us on YouTube here. Oh, I know what I did. I did one thing that Spencer told me not to forget to do.
What'd you do?
We're going to enable it on the site here as well.
It's not enabled on the site. Gotcha.
Yeah,
so YouTube, okay. So our YouTube listeners, you guys are hearing us on YouTube. We're not hearing us enabling us on the site. That's the problem here. So if you're watching it on YouTube, we're live. Sorry about the gremlins here. Joel's just fixing that up. We got a producer back tomorrow.
Should be fine.
I think we're going.
We're going. So, all right, take 2. Dennis, how was your weekend?
Not too bad. I was actually, believe it or not, I was looking out at the bay here and up in my cottage, and the ice is now gone. I sent out a picture. It's officially gone there from the bay on my Twitter account. You can see the view there from my cottage. So it's nice. Boating season. That means boating season is going to be starting soon. Once we get rid of that ice, like give it a couple of weeks. I don't want to go out the first day because I'd have to have my kid on the front looking for icebergs, but we'll give it a couple of weeks. We'll drop that boat in, and when boating season starts, yeah, that's what it's all about.
All right, let's at top of the show, I mentioned the SBUX trying to end the month green. We are trading green here by 8 points. Made a low just below the close, 26.7150 is your close. Your pre-market low is right there. It's 26.70. Pre-market high, 82.25. That's getting into the highs from last week. We struggled at 88.50, so that would take us back into the $28 or $2,700 handle. Crude in the red by 73 cents. Quiet couple days of crude. Now falling back into the 67 handle. Gold not getting any love this morning, down $10 at $13.40. Silver down 14 cents at $16.36. And all of a sudden, it's Merger Monday here.
Oh, wow. Big time.
Yeah. And boy, the Sprint T-Mobile one, doesn't look like it looks like you had a little of the price already baked in the Sprint, and they're not happy with the T-Mobile here.
And we said this on our show Friday morning, is what we were saying. And I just said, I think there's not going to be much of a premium here to be paid, if anything. And obviously, the stock was still trading up on Friday. So I was trading up at the $6.50 area as, the rumors that the merger was going to go through. Well, the deal comes out and it's not nearly as much as, maybe everybody expected to be. There's not a huge premium being paid here. It does look like, I'll give you the details here. I'll just go grab it from the Benzinga, the trusty Benzinga Pro. And the deal is, it's an all-stock deal, and it's for 0.10256 T-Mobile shares for each Sprint, or the equivalent of 9.75 shares of Sprint for each T-Mobile share. That worked out to a total of, I think it was $26 billion. Is that what the deal was, Joel? I don't see that part there, but in any regard here, it's below where the price was trading on Friday. That's why you see the stock getting hit this morning here, 572 in the pre-market. So, and there could be antitrust issues here too. So it's not like it's going to be just a smooth deal. So the risk guards are probably going to put a discount on as well. So those people who were buying Friday, hoping to hear a deal on Monday, got their wish. It just wasn't the price that they wanted.
All right. And T-Mobile, I'll just give you the technicals on that. And boy, I sure hope I mentioned to all our listeners on Friday about that $66 area. You had 5 consecutive highs at 66 in early March. Boy, you almost got there on Friday, 65, 68. Trading red in the pre-market here. Not sure how the street is going to treat T-Mobile after this deal, but boy, my level of interest on the downside is $62. You had a pair of lows in that area in the middle of the month, and then a little bit later in the month, last Tuesday, it got down to 62.10. So kind of a wide range in between 62 and 66, but those are the early parameters. Marathon.
Let's run through a few of these other deals here this morning, sure, Joel, because there is a ton of them there. So give us the list. Give us the list of who's buying who here this morning, because there's a ton of deals.
Okay, let's go. Marathon Petroleum here is buying ANDV and Endeavor. I don't know, company I haven't heard of. They're paying a nice premium for that deal. Trading up $20.12 at 142.50. Street not so convinced it's a good deal for Marathon Petroleum. That's trading down to $4.03 at 77.40. Let's just do a quick analysis of the acquirer MPC, because that is what will move the other stock. Man, just made an all-time high 2 days ago at 83.27. Now trading back in the 77 handle. I see a nice low here at 74.78. If in fact we can get down that low, 76.60 was your low on the 17th. Dennis, any comments on this deal?
I'll just give you the ratio. So it's 1.87. So it's cash or stock, $152.27. It looks like in cash, or 1.87 shares of the stock. I'm not sure if that's all stock. I just want to verify that further. Well, I can't do this. So the one thing we don't have your news guy on. The news guy can get you the information in the background while you're doing your analysis there. But I'm not going to dig too deep. But that's what the pro is saying. Okay. It's $152. But 1.87 shares if you're looking at the risk arb. So, and obviously with MPC trading down, that's maybe why you're seeing Endeavor not trade up to the $152 takeout price. Jump over to there's 2 more here. So we really had Merger Monday going here. 2 more deals to talk about. What are the other 2?
This is a little one, or little companies getting taken over. United Therapeutics, which is trading up 60 cents, is paying a little bit of a premium here for Steady Med Limited, a stock that doesn't trade a lot of volume, but it's getting taken over today. It's traded 11,561 shares so far. Really, I don't think I've ever heard of STD.
This is a weird one. So it's all cash, but it's $4.46 in cash. You might say, well, why is it trading $4.60? Because there's an additional $2.63 in cash if some milestone is met. I'm not sure what that milestone is. I don't think I've seen one of those in a long time where there's a condition where they can actually get more than what the original price here is. So that's why it's trading above that. So I guess 446 looks like would be the floor here now for this thing, and potentially more. So that's interesting. So I don't know. I'm going to have to dig into the details a little bit of that too. But if it's down at 446, it doesn't look like that much downside at that price now that this deal is on the table, if you think the deal is actually going through. And the potential for $2.63 more may be attractive to the risk arb. So 465, it doesn't look that bad to me.
And
again, I got to dig into the details on this one. So.
Yeah, the devil's in the details. UTHR, just like a lot of other biotech stocks, has been under pressure as of late, way off its all-time high that was made in early 2017. Somehow does go into major rally mode. Keep an eye on anything above 115. A pair of highs at 115.58, 115.69. That was from earlier in the month. An area of 3 lows to keep an eye on here in case they decide they don't like the deal. And that's in the mid 108 handle, 108.33. I see 108.63. So there's your support. Recent low of the move here if they really decide to whoop up on this stock. We got down to 106.30 on March 22nd. Our last deal here, VAC, is that's Marriott Vacations Worldwide, and that is taking over ILG. That's trading up $1.84 in the pre-market, and that's just ILG Inc. So let's take a look at that deal. Dennis, you got the numbers on that one?
Yeah, let's jump in. And again, this is not my job, so I'm going to be happy when Spencer is back because I'm not as quick on the news as he is there. But VAC is acquiring ILG for $14.75 in cash and 0.165 shares. So your risk arrows, that's your number, 0.165 shares of VAC. So, and that total deal comes up to $36.93. Now, if you look, VAC is trading down here at 40 cents in the pre-market. But if you take that, acquisition price, that's what you got to do is multiply it times 0.165, and you'll find the discount if they're trading any on this stock this morning.
Several highs in this stock at the 137 area. If we do lose Friday's low at 133.72, look out. This doesn't seem to be a lot of support here until you get to the series of lows surrounded by the 130 area. So, boy, I can't think of the last time that we had four mergers on a Monday. But
yeah, a couple smaller ones. But the Sprint T-Mobile, everybody kind of knew that was going down. That came out Friday night. And actually, if you look at the trading on Friday night in Sprint, it traded down 50 cents initially because initially they came out Bloomberg saying 24 billion, then it's 26 billion. But they really hit the Sprint hard right after the bell. That came out right. Actually, it was right almost on the close, right around 4 o'clock exactly. And then the stock collapsed because that deal price obviously wasn't as much as everybody expected. So they just want to get the deal done, obviously, and the premiums, it's not that great in the Sprint T-Mobile. That's the big one to talk about. And just to clarify here, Angie Baby making a good point here, MPC was, ANDV, just to let you know, Joe, that's the old Tesoro.
Yeah.
So TSO. So, when we used to always trade TSO, that's what it changed its name to ANDV. So that is a big deal. And if you look at some of your other refiners, they're going to be trading around here too this morning. So think about your Valeros, et cetera. So going to be action in the refiners here this morning from the deals. 8:13 here now, though. We got to go to the earnings parade here. We did get Mickey D's.
I got it.
Blasting off into orbit. And Joel's got the numbers for us. MCD, how are we doing on this report?
Q1 beat here, 179, beats estimates of 1.67. Sales beat as well, 5.14 billion versus estimates of 4.97 billion. Q1 global comps increased 5.5%. I don't know if that's Dennis or Luke that's been eating at McDonald's a lot, but that's a real nice move here, trading up $6.64. Wow, big old move. We have hit 165 even on the nose in the pre-market. Going to have a lot of orders to cut through to get there if offers in the book. Let's see if we could see where those offers had been stacking up. Oh, boy, 165.
That's a big level.
Yeah, look at that,
right
165,
now.
yeah.
Yeah, I actually just was trying to play from the short side here a little bit. We'll see how that goes. Sometimes fading these pops doesn't work very well, though, so it's trying to take it out here right now. So I may not be in this trade long. And again, I'm breaking the rule of don't do a live radio show and initiate new trades, actual. So whenever I'm trading live on the radio here, I always get killed here. But I was hoping the 165 would hold. It didn't. There was an iceberg there for a little bit, so I'll probably wiggle out of here.
What about if you would have left that Exxon Mobil alone on Friday? Did you Exxon Mobil? Remember you shorted that off the number? Did you see what happened at Exxon Mobil?
Yeah, well, I kept getting killed, but I had a good trade on it. So that was, but you know what? That was before the radio show started. So it's okay to initiate it before the radio show. Just trying to trade and do the live radio show is a very difficult thing to do. But ExxonMobil, so I shorted at 81 and I covered 79.5 right when the radio show was kind of starting. And then it popped back to 81. My problem, what I should have did was reinitiate it because then it obviously continued to collapse. And it must, just to go on a tangent here, it was a pair trader nightmare.
I thought
nightmare on Friday, because if you look, and obviously ExxonMobil and Chevron both had earnings, so sometimes those go in opposite directions, but they totally went in opposite directions. Exxon losing $3, Chevron gaining $3, but AT&T and Verizon, AT&T closed flat. Verizon was up like 3% on Friday, which was a huge move, and I'm not really sure why it blasted off. You had the T-Mobile Sprint stuff going on. You also had Charter Communications. There was some outside stuff from some competitors, but come on. I don't know where that Verizon move came from. That was a huge move. And then there was another one too. Oh, what was it? I was watching another one blow out there. I can't remember because I got the goldfish memory. I was even trying to look at my sheet here from Friday. But anyways, there was 2 or 3 stocks that just completely blew out on Friday.
Yeah, that AT&T off the poor report, that got slammed down to a low of 32.47. And that coincided nicely with your November 6th low of 32.55. So trading up 20 cents, 22 cents into 28 cents in the pre-market. Not sure if you're going to get a chance, but if you come back into the lower to mid 32 handle, big time support for AT&T. More reports out this morning. Where do you want to? How about Allergan?
Go to Allergan.
Okay.
Go to Allergan. It's one of the stocks in my invest portfolio. It's been one of my dogs. AGN trading up this morning, though, so getting a little relief pop here. But again, you're going to go into overhead, and I don't know where it traded to this morning, but I would just say that 170 looks like the Rock of Gibraltar up there. And if you got up there, did it get up there to the 170?
Not quite. Not quite.
Where'd it get to?
Your pre-market high is only came short of 160, 167.40. Not
okay,
much.
Not quite from that high. I was going to kick myself because
not much
I'd like to trade it off of that level. Obviously, I'm still sticking with the long-term investment, but I think there's value, but it's been a value trap forever. So it's hard when these stocks come out and they've been dogs for so long, and all of a sudden they get a nice pop. There's just overhead supply. That's the biggest problem with a lot of, when you're looking at something like Allergan, it's like, what's going to kickstart it? You really got to get through that 170 to really spook the shorts. And not only that, to really, get people excited about it again, to possibly get some long. Because everybody that looks at that chart says 170 is the Rock of Gibraltar. So I'm going to buy it at 167. What's my upside? So now it's 166 and starting to leak a little bit. Best bet's down to 165. So even if they report it, what were the numbers? Give us the numbers. Because fundamentals don't really seem to matter sometimes. Sometimes they do.
Q1 EPS beat 374 versus street estimates at 3.35. Sales beat as well, 3.67 billion versus street estimates of 3.59 billion. They're raising a fiscal year 2018 sales and EPS and Q2 sales. They're saying everything right, and Q2 EPS. So, good report, trading up 221. Street was probably looking for a little bit more. The stock has been in the doghouse as of late. Dennis mentions all those pops above 170. Let's see if we get a chance.
Big level.
Yeah.
I don't think it takes it out. It doesn't look like it wants to in the pre-market. And if it starts to leak, then you think this is one that can actually go red on a good earnings report. And we've seen a lot of stocks. We've seen some of these tech stocks absolutely blowing the numbers away. And Friday was another case where they're selling stocks on good numbers. And you can say, oh, well, Amazon was up 70 points, so that's not true. Well, Amazon was up over 120 points because Amazon traded up to 1634, opened at the highs of the day and gave back $60. That wasn't a great tape for Amazon on an awesome report. Kramer on CNBC called the best report he's ever seen. And Amazon gave back 60 points of the gain. But the worst one was Intel. Intel was up almost 10% pre-market. It gave the entire thing back and closed red. So it is hard to chase these stocks on earnings. Like I know some of the other stocks, maybe in some of the sectors, that have been weak, maybe, are continuing to come back as you get a little bit of rotation into some value. But man, I tell you, you were chasing those earnings on Friday, like the Intel, the Microsoft, the Amazon, you got hurt off the hop because they hit those things and they hit them hard. Intel going red, that was unbelievable.
Yeah, and we kind of talked about that. Long-term targets. If you traded in the lower 1400s on Wednesday, and here you are 1600 plus. The targets of 1560, 1580, 1600, 1610, 1620. I mean, they take those targets, they sell their stock. You had a high of 1638.10. You closed at 1572.62, trading up $11 in the pre-market. Let's move on.
Aviator One saying CMG was the one that held, but CMG was in the doghouse forever. And we actually said it on the show that day. It was 385. I was like, I wouldn't fade this because just too many people are short the thing. So different animal. Different. Obviously, not every stock is going to follow suit, but the leaders that have reported blow away quarters have not really been holding, the gains here. There is a few that obviously continue and buck the trend. Not every single stock is going to follow suit, but there has just been a theme this earnings season. I started with all the banks early in the earnings season of giving it back. And, you saw a lot of other tech stocks doing the same thing. And the Friday trading action in Amazon and Microsoft and Intel was not good to see those stocks giving all those gains back as well. I mean, even the Netflix report, if you think about, like, Netflix leaked a lot here 4 or 5 days after the report too, and that was a blowaway one as well. So they've had struggles. The leaders have had struggles, and I'm just talking the leaders. They've had struggles really holding on to the gains. Yeah. Call it baked in, call it what you want, but they've been selling these stocks in the good reports after the pops. Google, it started with Google was another one too. I mean, Google popped $50 initially on its report and ended up closing down $50. So there's just people bucking gains out there.
One thing about the CMG is you had a lot of people short going in. Then you probably had a lot of people trying to take a short off the open, right? And then the longs are just jamming it. Very, very nice move here. Had follow through after the big report. I mean, for this one, for CMG, I don't know who was looking at this trying to short it. The big volume was on that update when it gained nearly 100 points. It traded 7 million that day. It continued. The move continued on Friday, but only 3 million shares traded. It did add $5. So, it might be more of a little bit of, seller, buyers just finally, taking a break as opposed to, strong sellers. You're in an area where you had a vacuum back in July of 2017. So a nice follow through on the CMG earnings. Dennis, I got my trusty pro back here. What earnings report would you like to go to next?
Well, do you have U.S. Steel numbers? Did they come out? We know X came out and they destroyed U.S. Steel.
That was
and U.S. Steel had the terrible day on Friday.
Okay.
Opening up actually near the highs, around $36, and then just whoosh, all the way down to $32. Ugly day for U.S. Steel. AKS, talk that one. Numbers.
I don't think we got the numbers out here on AKS.
Oh, maybe they're not out yet.
Nope.
I can take a look here too, just to make sure.
I do not have AKS numbers yet.
Okay, so we're waiting on AK Steel. I think they're due to report. Maybe I'm wrong. I thought they were due to report. Yep. They were on my list. No, you know what? I have them. 1.66 billion. So I only got the sales out. Just coming out here, just breaking them 2 minutes ago. The net sales I've got is 1.66 billion versus estimates 1.57 billion. So they beat on the sales. I don't have the bottom line here yet, so just waiting on that report as well. But we'll get those numbers out to you as soon as we can. It does look like a beat on the top line though, and you can see the action here trading. It looks thick though, like AKS if you're looking at it here, and did not really sell off with US Steel on Friday, but it does look thick. There's 78,000 sell. They're right in the pre-market at 486. So somebody's trying to make a stand on it. You get up near that $5 psychological level, though. Those things always are big numbers. Why is 5 always such big numbers? Because a lot of brokers don't allow you to margin stuff under 5. So when you get to the $5, that's when a lot of securities and a lot of brokerage stocks become marginable, and that's when you can see them really, start to take off after that. But it's going to be a tough sled and probably up to 5 here. But we'll see. It's going to digest the report. And you can take out 5, then it gets interesting. But the steel stocks with the U.S. Steel action on Friday makes me not want to chase anything that's going up here, at least in the steel sector.
Yeah, I mean, if you think that all those tariffs and everything, that was...
It didn't help. That was the top. I mean, you think about that, and all that news came out, and U.S. Steel was going up on all that, potential tariff. That was the top. And it's back, and it's in the doghouse now. I mean, that was an ugly candle on Friday for U.S. Steel.
All right, let's just slip one in here. John Smith in the chat
sure.
wants us to talk about ON earnings, and I do have that.
ON Semiconductor, sure.
Yeah, let me pull up the chart here, and then let me go to my trusty Benzinga Pro. They got a penny beat for Q1. 40 cents versus 39 cents. And revenues were a little bit better as well. 1.378 billion versus estimates of 1.36 billion. big range on Friday, and we're trading up 57 cents. Let's see what the pre-market high is.
Yeah, a one share.
Oh, really?
Not 100 shares, on one share. So somebody paint the tape there, but this is, it's 22.98 bid at 23.96 offer, so it's a buck wide, which is basically Friday's range here. So somebody's saying it's going to trade within Friday's range. It's difficult to say how they're going to interpret this though. So it looks like it's going to be higher. It's just a matter of how much higher, at least with that bid there. But things can change in a hurry when stocks only trade one share full on in the digestion period.
As long as we hold $23 on the downside, three lows at 23.03, 22.96, and 22.95. Those are your three out of your last four lows in ONs on semiconductor. On the upside,
and just to clarify, the conference call, Joel, is there at 9 a.m. So that's when they're going to have the conference call. And we know a lot of stocks, when they can't really get a feel, sometimes people go to the conference call to listen, and that's where if they say something bullish or bearish or going forward here, that's where you can really get some movement. So you really got to watch it when they've got those conference calls going on.
And we kind of dropped the ball a little bit when Caterpillar, when they had that big decline off earnings. I believe that was on Tuesday. Basically on the conference call, the CEO said, it's not going to get any better than this. And that's not something that you want to hear on a conference call after a good earnings report. So, if you're looking for, activity in these stocks when, even though they have good reports, a lot of times, listening to the conference calls can, comments like that, like it doesn't get any better in this, that made people hit.
That was huge. That was a huge comment, and everybody ran for the exits. The CEO's got to watch what they're saying.
I mean, they got to know there's going to be that kind of reaction to it, right?
Yeah, well, that's just it, and it's all about interpretation. And Spinner making a point there too, just saying how AMD held the gains, and I mean, it's all about sentiment a little bit going in as well. I mean, when stocks are straight up going into the reports, they got them still blow it away. We've always said that, and when stocks are in the doghouse like AMD was going to the report, they don't have to do quite as much. And if you look, AMD held all of its gains and actually is holding here again this morning here and looking a little bit stronger as opposed to Intel, which gave it all back. But you can say, well, that Intel report was just awesome. Why did it not hold? It's just because expectations were higher for Intel over a company like AMD.
All right. What earnings report would you like to index here, Dennis?
Well, we can do that, but we only got 7 minutes before we're going to have Michael Pachter on. He's awesome, so we're obviously going to be covering a lot of stocks with him as well that he covers. But let's just go over to the ratings parade here just for a second, because there's some interesting ones here this morning. The quiet period looks like it's over here for Spotify. SBUX coming out. We got 4 brokers coming out with buy or equivalent buy ratings. Some of them call them overweight, but we got Goldman, UBS, JP Morgan, and Morgan Stanley initiating at buy or / overweight this morning here. Price targets ranging from 190 to 200 bucks. So SBUX is trading up substantially on everybody seemingly coming out bullish here for the stock. It's up 4 points here now in the pre-market. It is in a little bit of breakout mode. It looks like it is going to potentially test those all-time highs here. Maybe not today, but 169 was where she got to on the initial, I guess it wasn't an actual, the way that they normally do the IPOs, but on the first day of trading there, it came out. 169 was the high, so we're $4 away from there now, Joel. Potential to test that.
165.63 is your pre-market high. Trading off a buck there at 164.37. We kind of gave Sean a hard time when he came on, but
he was bullish in the 140s.
He was,
and he's right again. That's Sean Udall. So hot right now.
Yeah. Just to keep an eye on. I mean, you are blowing away the range from Friday. Now you just got to look at that big day when it had 169 even. That was the high in the IPO, or the offering that it had. It's never closed above 160, and it's interesting. You had a good day on Friday. Friday was your old-time closing high at 159.98. So still trading, $4.50 above that old-time closing high. But once again, big windfall. The stock was what just went down. Where did it trade to? It traded down to 135.51 at the beginning of the month, right back at all-time high. It could be a trading range, but a wide trading range at that. All-time high, 169 even. Do you use Spotify, Dennis, or are you
No.
more a Pandora guy?
No, I don't use any of that stuff. You know me. I'm old school. I'm a radio guy.
Yeah.
I have Sirius Radio too, so I just listen to my 80s stuff. I'm a big 80s, 90s fan. I mean, I went to school, high school was in the 90s, so that's what I like, kind of like. You know, I like that grunge music a little, but I like the 80s too. I mean, I was always, liked a lot of the 80s music. So I'm an 80s, 90s guy, but I just have my little Sirius thing, and I can actually listen to that in the house as well. So I'm a Sirius Radio fan.
All right. What other ratings caught your eye today?
Save catching an upgrade, which is Spirit Air catching an upgrade at JP Morgan. It's a stock that has been in the doghouse. It's always interesting when an analyst has a contrarian view, because we talk about so many analysts that just chase price. So it's nice to see some that come out with a contrarian view and actually upgrade something as the stock has been going down. I mean, Save has been in the doghouse. I had this in my invest portfolio once. I wrote it from 40 to 45. I'm out. I don't know if I'm going to go back in. I don't know. You get on those Spirit Airs, and I took Spirit Air when we went on a recent trip to Disney, and I tell you, the airlines are just not as nice as, some of these other ones. And we know you get what you pay for. Spirit is kind of, you're paying cheap, but it rubs you wrong when they can't even get you a glass of water. Like they want to charge you for every little thing, and I get it. But, what else rubbed me wrong too is, we had our 2 suitcases, and they were like 48 pounds each. And I was like, I know, because you have under 50. I get to the airline and the weight limit's 40. So it's 10 pounds less than most of the other airlines. And I'm like, come on. And, I've got a baby, and we got, the boy. So we're trying to squeeze it all into 2 suitcases there to keep it. And then I had to pay the overage charges anyways. And you want to know what the overage charge was? It was $30 on the first bag and like $50 on the second bag for one way. So I'm like 80 down and 80 up, I'm like $160 in overage charge because I'm 8 pounds over. I mean, they just burn you so much on the little stuff there that you wonder if you even save anything. So it's all kind of just rubbed me the wrong way. And I'm almost thinking, I'm not even going to fly Spirit anymore. So if I can't fly this myself, why am I going to put the stock in my investment portfolio? So that being said, getting upgraded here this morning is showing some life. It's up $2, it's up a point here in the pre-market, close at 35.49. There's some big support, below. We say underneath demand, we use the term overhead supply a lot. But there's probably some underneath demand here in Spirit too, because it found a home in the 30s back in July, August, September, October 2017 in the mid 30s. And it's starting to find some support there again. So a little love from JP Morgan may kickstart it here this morning.
You did trade up in the pre-market, holding $36. That was your high from Friday. The close, of course, you want to see that. The support has been accumulating just under 35. You had a 34.68 and a 34.64 low. Those are a couple of the April lows. Now, if it really goes into rally mode and you're thinking of shorting this thing, just be aware that your 2-day high and 3-day high are up in the 38 handle, 38.18 and 38.36. So not a lot to cover here. Important it holds 36, and you may get lucky here. I don't know, boy, to see this thing trade up to those pair of highs in the 38 handle. I'd say that'd be a pretty good move off the upgrade from Morgan Stanley. We got about a minute here till we bring in Michael Pachter. Did you want to talk about any imbalances?
Let's go take a look. I haven't looked at them this morning. I don't think anything really jumping out to me huge here. I got Morgan Stanley 96,000 to buy. Some of your banks are trading higher here this morning. TLT is just slightly lower there, but the banks showed a little bit of life on Friday. Not a lot of life. They've kind of been in the doghouse there, but if you look at Bank of America, finally, got a little bit green there, but really the banks have just not been performing well at all here, and that's really since the earnings season. Like we said, Goldman Sachs actually was making a new 52, or at least a new low on the year just a couple of days ago there. So the banks have been in some rough sledding here as of late. 96,000 buy. Morgan Stanley is giving it a little bit of love this morning. Disney, which we didn't talk about here yet, they came out with the big movie. What was it, New Avengers that came out with DIS? Yep. It's got 54,000 buys, trading up $1.50. It was one of the best openings of all time or something over the weekend. I think it was the Avengers movie. I'm not really into any of those superhero movies, but I just caught it, just going across my Twitter screen there. that said that they had a big weekend. So I'm assuming that's what's driving DIS up here this morning.
And also, there was, if you get a chance, take a look at your Barron's, Disney versus Netflix, perhaps starting to catch up there on the streaming and the online business. All right, we're going to take a quick break here, and we're going to bring in Michael Pachter from Wedbush Securities. We'll be right back with Michael. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, and we are joined by Michael Pachter, equity analyst for Wedbush Securities. Mr. Pachter, how you doing on this Monday morning?
Good morning. I'm on my second cup of coffee, ready to go.
Yeah, you're out there on the West Coast, so you get your day started real early, and then you probably get to end it early as well. But let's just talk overall here. Earnings season. I mean, the street. Let's just talk the market. The market had been kind of volatile. The street wanted some good earnings, and we certainly have gotten some good earnings. But boy, I tell you, you want to look by looking at the tape at the end of the day. Some of these stocks are, for as good a reports, they're kind of getting tarred and feathered. Give us your overall assessment of the Q2 earnings season, Q1 earnings season.
I'm far from an expert on, overall market dynamics, but it seems like the stocks that have appreciated the most in the last year or so are the ones that are having trouble, sustaining gains on good earnings. So certainly the FANG stocks are kind of in there. Amazon's probably the outlier, that it's approaching all-time highs. Netflix is having trouble holding it. Clearly, Facebook has other issues. But I think that we just need to end market volatility. I think we need more stable, political and economic policy. I think the market is a little spooked by, the prospects of tariffs and that seem to come randomly. And so, you get these up days because as you said, earnings are good, and then down days because, the administration does something that's unexpected. And, if we can see the political side of the equation smooth out, then we can factor in higher interest rates and determine whether the bond market is a better investment than the stock market. I personally believe things are going to stabilize, notwithstanding, how the president tweets. I actually think we're starting to see a slightly more normal behavior, and I actually am encouraged by what we're seeing in Korea, for example.
Hey, Michael, Dennis Dick here, and I just want to go back into what Joel was saying there. We saw Amazon come out with a fantastic report on Friday. Jim Cramer was on CNBC saying it was one of the best reports he's heard of all time. I don't know about that, but tell us about the report and the trading action, because Amazon opened up substantially. It did give back 60 points of the pop. Is that just a little bit too much too fast, do you think, here? You've got an $1,800 price target on it. What did you think of the report?
I have to be fair. Amazon's an impossible company to value because, they aren't going to trade on conventional metrics. They demonstrated with this earnings report, they can drop whatever they care to the bottom line. So I think that what investors should be focused on is gross profit dollar growth. And gross profit dollars were up 7 billion with a B in the March quarter versus March a year ago. So in other words, they made 20 billion in gross profits in the March quarter. They made 13 billion a year ago. They managed to drop 900 million of that to the bottom line, but flip that over. They spent $6.1 billion more in operating expense year over year in March, and they had 900 million left over. What happens, the rest of the year, and what happens next year? You're going to get very likely another, 16 to 18 billion of gross profit dollar growth the rest of this year. And then on top of that, another 20 billion or more next year. How high can spending go? Are they going to run out of projects? And so, my bias is that they're getting to become a mature company. AWS, it's growing at 48%, year over year. They're just going to run out of servers to build. They're going to run out of fulfillment centers to build. Not in the next 2 years. It'll probably be 5 years out. But that's where the dream actually turns into reality. When they continue to grow gross profit dollars by 20 billion and spending only goes up by 5, let's say, earnings go up by $30. It's that crazy. And so, a $1,600 price on Amazon tells you that, the dream is they're going to be making $100 one day, and that they're trading at a, 16 multiple on a realistic, earnings target. And I actually think they will get there. I think that in the next 5 years, this company is earning $100 a share. And so I think that this price is warranted.
Yeah. So this actually, it has some value even on traditional metrics when you look at it that way.
Right. It's the same story with Netflix. I just don't share the bull case view that Netflix can turn on the profit taps, because Netflix doesn't control their content costs, and Amazon, if content costs rise, if the cost of goods rises, all of their competitors have to raise price as well. So if washing machines or televisions go up, Amazon can raise price. Everybody else raises price as well, and it doesn't matter. With Netflix, if content costs go up, it's not clear they can pass that through to the consumer.
Let's go to the Facebook report here. We know Facebook got killed, really hit hard there on the data stuff. And it's come all the way back and then had a good report here. It got a nice pop. You've got a really high target. Are you sticking with this? It's $275 target. That would be over 58% upside from about where we're currently trading at, which would be impressive. So still sticking bullish here on Facebook. And what did you think of the report?
Yeah, I work with a guy named Ian Weiner. He's a regular on CNBC. He's got a saying, Tina, there is no alternative. So if you're an advertiser, if you want to reach consumers and you're an advertiser, where do you go? And the answer is you go where the consumer is. And consumers are spending, 45 to 55 minutes a day on Facebook. Ask your mom if she cares about the Cambridge Analytica breach. And first of all, she doesn't know about it. And second, she's still on Facebook. So advertisers don't care either. I mean, consumers are worried if their data is misappropriated and bad things are done. But the fact of Cambridge Analytica is that, Republicans were told to vote for Trump, and Democrats were told not to vote for Hillary. So we would have gotten those same ads if Facebook had sold the data directly to Cambridge Analytica instead of it being misappropriated. I don't think this is a consumer problem. I mean, I get that the regulatory risk is real, but advertisers don't care. As long as consumers still go to Facebook, they're going to advertise there. Facebook revenues were up $3.4 billion year over year in Q1. And, again, they managed to drop a giant chunk of that to the bottom line. That's going to continue as long as Facebook is the only place people are spending that much time on social media, and they are. And as I said, they grew by 3.4 billion. That's more than all of Twitter for a year, and that's Facebook growth in Q1. So, it's a really good signal for Snapchat, for example, that advertisers are throwing more money in social media. Twitter had good results as well. It just shows you that if advertising dollars are floating toward internet and social media in particular, and Facebook's going to be the beneficiary as long as they have the audience.
Let's just talk Twitter just for a second. And actually, over the weekend here, it was disclosed that Twitter had sold some data to Cambridge Analytica as well. It's trading down 1% in the pre-market on that news. Not getting hit quite as hard there. You've got a hold on it, $26 price target. Just quick thoughts here on why Twitter can't or why you like Facebook so much more than Twitter.
I actually took my target to 29 after the report because I think that they're starting to show some signs of doing something right. No, I didn't mean to correct you, but just that I am starting to get more positive I'm more constructive on Twitter. The site itself is actually quite good. The people who use it, I think, are pretty satisfied. The only knock on Twitter is that I don't think they do enough to attract new users. And I think that non-users don't really appreciate the power of Twitter. Advertisers do. They understand that audience, and I think they're willing to spend dollars to reach that audience. And, I think Twitter will work as soon as they start to reinvigorate monthly active user growth. You're starting to see small signs of that. 6 million up was pretty good sequentially, but they're still only in that 340 million range. They've got to start showing 10% kind of sequential growth before I think this thing's going to command a real multiple.
All right, let's move on. We're getting a question in the chat on Zynga, ZNGA, just hanging out here at the $350 area. Share your thoughts on Zynga.
They report on Wednesday. They've delivered 12 consecutive quarters of upside to their revenue guidance. They actually report bookings, which is cash revenue. And they've had 8 consecutive quarters of EBITDA growth. So, if we get more of the same, I think the stock goes up. I think the only problem with getting more of the same, the booking side, I'm pretty confident that they do beat their numbers. On EBITDA, they actually had a blowout number in the December quarter. So, they did 37 million in December. They're guiding to 30 million this quarter. I think they'll beat their 30 million guide. It's going to be tough to deliver 8 million of upside to that, but good enough. I don't think the stock goes down. This story is really all about new games and growth from new games. They have none in the first half of this year. They have at least one in the second half, and it might be 2. I think we get some visibility when they report on Wednesday. I think they'll probably tell us that there is a title coming in the September quarter, and I think that the stock probably starts to move when that title launches. So a second half story. I don't see a lot of risk into the print. I think people can comfortably own it here, but investors are probably not going to get paid until the second half.
Staying in the social media space, hold on Snap, just quiet. Hasn't really had the IPO. It came off. It's tried to come back a few times. I think that last report, they juiced it to 22, but come back down and nicely fill the gap, $14 area. Share your thoughts on Snap.
They, I think that they don't know what they don't know. That's about the best way I can say it. So I think that they're overly confident about what they're doing, and I think that they're actually on the wrong path, and they don't really appreciate what they're doing wrong. Their site redesign, I actually think probably ends up working and getting them, more advertising. But it did alienate consumers, at least for a time. Consumers are going to overlook it because Snapchat's audience uses it, religiously, and they're pretty faithful to the site. But my bias is that, that they're going to grow revenues slowly. Profits are going to be there in a few years, not anytime this year. And so, until they're profitable, it's really hard to dream the dream. Twitter's profitable now, so trading at a little better multiple. Snapchat's not. I think if Snapchat turns profitable in the next year or two, then they'll start to get a little better multiple. And if they continue to grow top line, then I think investors will like the story. I'm not ready to sign off yet.
All right, I'm going to mix a couple here, and then I'll also bring in another issue. You're covering the cinemas, IMAX. You have a buy on, Cinemark Holdings a buy, AMC a buy. Big movie this weekend with the Avengers. Just overall, is there going to be good movies coming out, and people are going to start heading back to theaters instead of Netflix? And I got to get your opinion on HMNY. Do you have that movie pass from Helios and Matheson?
I don't, and let me start with them. I think they're a joke. I don't know anything about their business other than MoviePass, so I don't know what else Helios and Matheson does. MoviePass is a joke, and I think we'll be out of business in 18 months, if not sooner. MoviePass, the line I've been using is they're selling dollars for quarters. So give us a quarter and we'll give you $1 back. That's a great deal for consumers, but it's a really bad deal for them, and they're just not making money. No chance are they going to make money at $10 a month. So they can't be unlimited. Even if the new deal that they did with, I forgot. They partnered with, another service I'm blanking on, a subscription service, but they limit you to 4 movies a month. Even there, they're going to lose money. On the theaters, look, the fallacy in the investment logic on the theaters is that nobody's ever going to go to the movies again. And as you mentioned, Avengers, set a weekend record for box office. And we had Black Panther, obviously, in February that was just, I think, number 3 or 4 movie of all time. It's clear that consumers will go to the movies when there's something to see. And really what's been going on in the movie business is that the major studios have trimmed the release schedule from 200 movies, more than 200, 10 years ago to 130. And there are bigger blockbusters, but there's fewer to choose from. And we've lost romantic comedies. Remember we used to go see Cameron Diaz and Rob Lowe in movies and Sandra Bullock, and they're not doing it anymore. So you've lost that portion of the audience. You haven't lost the blockbuster audience or the horror picture audience. And so we're going to continue to have, the faithful people continue to go. I do not see that declining. Netflix has no impact on movie attendance. Netflix's films like Bright and Cloverfield Paradox, those are just not movies you've heard of or you care to go see, and you wouldn't have seen them had they been in the theater. So Netflix is just not going to spend, $250 million to make an Avengers type movie. And I don't actually think the talent will go there because I think they like the award shows and they like the big box office, and most of them get compensated on box office. So I truly believe that attendance will decline by 0.5% a year for the next 20 years, but not by 5%. And the group got hammered last year because attendance, box office was down 6%. It looks like it's going to tick up again this year. It should be up again next year. If you have a flat box office, these stocks are going to trade at 10 times EBITDA or better, and they're currently trading at 8 or below. So I think you have 25% upside in all of them. IMAX is a little different because IMAX actually has square footage growth, unlike the other guys. IMAX is building more boxes, so IMAX can gain share. And if you live in Switzerland, for example, where there were 2 IMAX screens last year and there will be 7 this year, the odds are they're going to pick up a little share in Switzerland. So that's happening all over the world with IMAX. I think they're kind of uniquely positioned to thrive even in a flat box office environment. AMC has traded down by 50% from its highs because they're over-levered. And so over-levered means that when things are bad, they get crushed. And when things are good, they benefit immensely. So it's a risk because they have a lot of debt, but you get rewarded if box office is sustainable. Cinemark is much more conservative, didn't drop as much, so less upside, but a lot less downside. So if you're risk averse, that's a better play.
We've been on the line with Michael Pachter. He's an equity analyst for Wedbush Securities. You can follow him on Twitter at Michael Pachter. Sticking to the numbers on the cinemas, so I'm gonna have to take a look at those and maybe maybe take a little bit, add a little bit to my portfolio. Thanks a lot for the great information, Michael. We will speak to you again soon.
All right. Thank you, Joel. Bye-bye.
All right, S&P futures leaking a little bit here, Dennis. And we are trading at 2675.75, about fell below mid-range on the session here, Dennis. Or actually, we're at mid-range on the session. What's going on out there?
Yeah, it's leaking here, like you said here. I don't know. The Friday action, and if you look at the S&P chart overall, it's difficult. Like people who are saying, oh, we're going up or going down, it's tough. We are in a trading range, and we are in the middle of that trading range. I mean, look at the action from February, March, and April. Just bring it out there, looking at the last 3 months. We got down there at 255 when everybody was throwing everything out, and then we rallied up to 280. Then we came all the way back down to 255 again to retest in April, which passed, which makes us think that the W, and we were talking even with Mark Chaikin on the show and saying that W recovery is in. But it hasn't been smooth. And, the recent little earnings around the air of, a lot of stocks getting hit on the earnings, starting with Google there, has put a little damper and definitely put a little bit of nervousness back in the market again. Now we're on the comeback trail a little bit here. Amazon report was great, really helped us out there to a certain extent. But really, when you stop and look at it, you're kind of still just in the middle of this trading range. So I don't really think the bulls or the bears are in control here yet. So you just got to trade it day to day. It's still going to be on headlines. There's still lots of things to worry about. There hasn't been a great response to great earnings, which makes me a little bit nervous. But to get bullish or bearish here right in the middle, I feel like it's a coin flip.
All right, I just want to look at, because we're talking about the month end close here, and we're trading the June contract, so we did not have a rollover. We ended March at 26.43. So we are, considering all the volatility and everything, we probably were due to close higher on the month. We got into that 2680 handle, and I just want to, alert our traders and investors that we had a couple highs there last week. So it just looks like there's more trimming going on than, new buying or, outright, heavy selling. We got about 3 minutes left here. Did we cover all the big earnings?
Chat's got a couple questions.
Sure,
Let's go down. Downward Dog there's asking, do we have an opinion on the emerging markets here? I have been adding emerging markets to my portfolio heavily in the last 6 months. And the reason is we have just underperformed. I mean, there has been a lag. The U.S. markets have been outperforming everything. But if you look at a chart of the EEM for the last, even 10 years here, we've really got nowhere. And I feel like, we got really hit hard in 2016. So if you were buying in 2016 when the EM got down to 30, you're up substantially. But really, if you bought in 2011, EM was $50. If you bought in 2012, it was $45. 2013 is $45. We've kind of been in a trading range here. But I feel like there's been so much outperformance in the U.S. markets, and I feel like so many stocks in the U.S. are fully valued there. I feel like there is some value there in the emerging markets. So, EM is your natural, the first one that you can look at, but there's lots of other ETFs to get exposure to that as well. But the world markets just have not been performing like the US markets. So I'm just adding a little bit of diversification. I feel like if you're taking a long-term approach here, I think there's some value here in the emerging markets. So Tim Seymour, who had on as a guest here on our show multiple times, obviously on Fast Money all the time, he's always bullish to see. And honestly, I'm going to give Tim Seymour some props here. I think he's one of the best commentators that we get there on CNBC. The guy knows his stuff. And, even when you get, other people coming on Fast Money, some of them I feel like some of them are just looking at charts. I feel like Tim Seymour looks at everything. I really like him as a guest, and I really value his opinion. There's not a lot of people out there that I really value their opinion. Michael Pachter, who we just had on the show, definitely value his opinion because he does his homework. He knows what's going on. But there's a lot of people, a lot of commentators that get on there. They're just looking at charts and chasing price too, just like a lot of other analysts out there are just chasing price. Michael Pachter, great, because he'll make a contrarian call. He's not scared to go against everybody else, which I very much respect. Tim Seymour, I just think just really knows his stuff. He's always, and he was saying that the other day, how emerging markets haven't really performed as well as some of the other markets, and he likes them still too. So I think the emerging markets are a good place from a longer term perspective.
All right. After the close today, we have Nutrisystems. We also have Transocean Rig, which has been on a really nice run. Things heat up tomorrow morning. You have Aetna, you have Merck, you have Grubb, you have Seagate Technologies, Cummins Engines, also Archer Daniels Midland, and We don't even have to look at that chart knowing that it's a food stock. I guess this one's held up a little bit better than some of the other ones. Also, the biggie after the close tomorrow. You have Apple and Gilead, Snap, Juniper. So big reports. We will have Nick Shaheen on tomorrow morning. He'll be recapping the trading action from Monday, how he's positioning himself for the Apple report. On Wednesday, we're going to have the Piper Jaffray analyst, Michael Olson, on discussing Apple's report. And also Gene Munster is going to stop by. We're going to go a little bit later on Wednesday. We're going
to this big week.
Yeah, big week for earnings. Just real quick, I mean, pounded Apple into this report here, Dennis. And I don't know. They're just giving you a little heads up. I thought the 165 was going to be the level, and now it's kind of looking like, what was our low from Friday? 160.63. So
they're worried about the iPhone sales going forward. I mean, Apple has been, and I'll say it again, it's kind of almost a one-trick pony here right now. For over 50% obviously come from the i, and as everybody continuing to need new iPhones, I mean, I upgrade every 3 to 4 years, and as long as the cycle continues, it probably still remains cash cow for them. But they do need to come up with other products. But I just keep thinking they're going to be coming out with some stuff. I mean, Apple, there's a lot of smart people that work there. I think going forward, there's going to be stuff that we can't even envision that Apple is going to come up with going forward. The bearish scenario is just an iPhone company, and now, they're not getting the growth that they can. It's almost a $1 trillion company. It's difficult to grow and continue to grow. So it shouldn't trade with, the multiples that, other companies trade with that are growing. That's why Apple trades with the discounted multiple. But I think there's a lot of people smart there. I've been in Apple for a long time. It's been a great stock in my invest portfolio. I'm sticking with it. I think you're buying Apple on pullbacks, and maybe they hit it on the report. Maybe the iPhone numbers aren't great. You get a shot down at that 150, though. I think you find buyers. Maybe, it's a Nick Shaheen way, and you say, hey, if you would be willing to buy Apple at 150 or 140, why not rate some puts down there? Maybe there's a play in there if you're looking to put in your portfolio. And then obviously, you get to bring in some extra premium. If you're willing to buy the stock or willing to buy more, maybe that's a play for you. We'll have Nick on tomorrow there, though. When does Apple report? When is the actual report?
Tomorrow after the close.
Tomorrow night.
Yeah.
So we'll get Nick on tomorrow. We'll see how he's playing it ahead of the report, and then obviously get the numbers. I'm a little worried about the report, because I think, I agree. I think there could be some, iPhone. I would love to see it actually come down to 150. And here I am kind of talking against my invest portfolio, because I'd like to add back to it. I sold half of my stock back in that one. I can't remember where I sold, 160 or 170. I think I sold somewhere in there. So I'd like to get that other half back. So I'm kind of hoping that it's going to pull back to the 150 area so I can get my stock back.
All right, that's going to wrap our show up for today. Only one little hiccup. I didn't enable the live stream on the sites, but not too bad, though. I'm going to upgrade my performance here the last couple of days running the show. Mr. Israel will be back in his seat tomorrow. Have a great trading day, and we'll be with you guys tomorrow morning.